Shareholders began to troop into the Standard Group premises as early as 9 o'clock in the morning for the 93rd edition of the Standard Group Annual General Meeting, and with the quorum met, the business of the day was underway. Shareholders lauded the continued improvement in company performance, with turnover having increased steadily from 1.76 billion in 2004 to 3.1 billion shillings in the year 2010. Shareholders, however, noted that the final dividend at 50 cents per share was too small and asked for a greater consideration in future.
Our earnings per share is 3 shillings and 39 cents, yet you are only giving us 50 cents as a dividend. 50 cents is too small.
The company board was, however, quick to point out that with the company performance strengthening, the dividend was likely to improve in the near future.
Company law requires us to do that. We are covered by insurance for a lot of that money. But if there's any amount which insurance does not cover, it's already been deducted against the profit. We have to do that in accordance with international financial reporting standards.
This is a temporary challenge. A promise is a promise. Next dividend payout will be more than 50 cents. I will encourage my colleagues in the board. So you should actually be assured that the next dividend payout will be more than 50 cents.
There was, however, concern over the consistent slide of the Kenya shilling and the effect this will have on cost of doing business in the country.
That the continued depreciation of the Kenya shilling has a negative impact in the performance of companies, including the Standard Group, including your company. And for that reason, we've asked the monetary authority, which is the Central Bank of Kenya, that it cannot afford to say it is helpless in ensuring that it uses its available monetary policy tools to influence the stability of the Kenyan shilling.
Company social responsibility was also under the spotlight.
Independent companies like yourselves, because the profits you get, you also give back to the communities in Kenya. If you can have segregation in Turkana and Northeastern and these eastern places where there's a lot of trouble all the time, not just giving out 300 million or millions, but do something on the ground so that that one becomes permanent solution for those places.
You have also seen us proactively engage with other leading corporates, including Safaricom, Kenya Commercial Bank, Kenya Airways, and many others, where Safaricom itself has deployed its infrastructure and Mombasa for mobilizing resources to help the ongoing food crisis in the name of Kenyans for Kenya. And I'm sure you and everybody here as shareholders has made your own contribution through Mombasa, so that we stand proud as Kenyans that we can actually deal with our own challenges ourselves without waiting anyone else from outside to help us.
Shareholders also elected Paul Munyoki unopposed to the new post of Executive Director for Value and Innovation. Peter Kabakati and Prime.